everyone to this first in what we hope to be a series of events, of Ivey alumni events on FinTech. I actually am the co-director of a new research lab on FinTech that we've set up. We've identified that FinTech is obviously going to be a source of many jobs for Ivey alumni as well as students. It's obviously a major trend in financial services. I've been meeting a number of people, including Kevin Clark. Kevin is actually a veteran in the banking world, having spent a career at Scotiabank, departing as a senior vice president there, along with his partner Troy Wright, to start Lendified. Lendified, as Kevin can explain in a moment, is a fintech startup that basically provides loans to businesses by looking at their cash flow against receivables. Vuk Magdalenik. Vuk spent a decade working in capital markets, in debt capital markets. Having worked on that desk, then decided, why don't we launch a fintech platform to allow online companies to issue bonds to investors with the participation of dealers. Erin Bennett, who works in CIBC. CIBC, like many of the Canadian banks, has been active in partnering with fintech startups. You may know that they partner with Borrowell, also with Thinking Capital, and they've also partnered, they're part of a consortium that's looking into blockchain called the R3 Consortium. I'll ask Kevin to start here. As an alumni who's worked many years in banking, why did you decide at this point to start up a new business that would be taking on very large, well-funded incumbents?
But, you know, 30 years at one institution, I just made the decision that that was enough. I had a wonderful career at Scotiabank, and by the way, I'm not paid or affiliated either to Scotiabank to be here. But it was a fabulous career, but I just decided that there was time to do other things in life. And I will also just tell you as a head start that Ivey was the best thing that ever happened to me. I thought it was an incredible education, and it got me everything that I've done. I think it's a fantastic organization, institution, and network, and so good on all of you for being a part of it. I'm thrilled to be a part of it. So I hung up the banking bit after 30 years, and with a colleague that I'd known a long time in the bank, made the decision that we could harness the knowledge that we had and bring the fin to FinTech. And that's, so we've taken the strategy of saying, what can we do to apply the knowledge that we have in FinTech? Because we looked at it and saw a lot of tech, but we didn't see a lot of fin. And so we thought, you know, might this be an opportunity? So that's why I'm the oldest guy in FinTech in Canada. So we started this thing really on a passion that we thought that small business in Canada does struggle to get access to the capital it needs, notwithstanding the strengths and focus of the banks on many parts of the Canadian economy. The small business economy is an important one. And passionately, we thought that we could serve a market that wasn't necessarily being served as well as it could be, that there was room for others to try to find a way to provide a frictionless, more efficient experience to bring access to capital to the marketplace. And so made the decision to try to bring technology to the 5 C's of credit. So the Lendified, as a lending technology company, if we have one core capability, it's our view that we understand credit, and what we're trying to do is bring technology to the point of, so when I sit down and analyze a credit, the tech guys are saying, what are you thinking, what are you doing, and how do we actually write code against what you're thinking? That's effectively what we're trying to do. And to get it right, create a portal experience, and so forth. So the business proposition is really around trying to solve in a marketplace that would appear to have a need. The business platform and value-added strategy is to bring a frictionless experience at a cost base that's much lower than the incumbent structures that are in the financial marketplace today. And to sort of finish the point, we believe, and I've maintained this since I started with Troy, that we are a compatible platform, not a disruptive one. There are lots of things that we can say within FinTech broadly that are disruptive, that move fast. And it's like traffic. You only have traffic if your car wants to go faster than the car in front of you. If you don't have traffic. And so our view is that we are compatible. We can run at speeds together with financial institutions and add a lot of value, or we can run independently and provide the marketplace with a solution that we have proved to be a valuable one.
Okay, so Vuk, you also, were working in a large incumbent bank and chose to become an entrepreneur. Could you sort of describe your path and how you got the idea for your business?
Yeah, so there was a step after that. I was a consultant. So yeah, I was at the structured product desk at CIBC, and then moved on to PwC in their risk and regulatory consulting. So. And consulted in Toronto and then New York for a little bit. So I guess it was kind of the eclectic mixture of jobs and projects, both in front office, middle office, back office. I spent a year at one of the large banks in the back office capacity, kind of wiring in how you aggregate risk, how do you look at systems that don't necessarily, have all the data elements available. So really kind of low-level tech stuff. But all of that together, I guess, exposes you to the problem set. And then when it came to me moving back from New York, I was like, okay, well, what do I do now? And quickly, I think, surprising to me, even I'm a first-time entrepreneur, was kind of how this opportunity was really clear in my mind as a need. And then everything snowballed very quickly after that.
Can you describe what Overbond does?
Okay, yeah. So the best way, I guess, to describe it is it's a digital investment banking workflow. So if you think about investment banking, really it's confidence building exercise with multiple counterparties. It starts with the relationship. So the first part of our platform is kind of Salesforce meets Bloomberg, but it gets tailored to the fixed income asset classes, specifically primary bonds. So how do you issue a new security in a bond way? The second part of that confidence building is, okay, well, people need to know now where you have a relationship, what is the quantitative side of things, what's the data, what's the analysis looking like. So we, on that front, wire in Thomson Reuters real-time API and overlay that with a lot of analytics, some predictive, some visualization analytics that you can actually analyze the data set. And then the third part is, okay, well, now we've had a relationship, we build confidence, looking at the data, I'm ready to, express interest or submit a ticket to you for a certain size in this given moment. And that's our quotations marketplace, if you will, or expressions of interest capability. And the third part, well, we're now all confident we can execute a deal. So we have a deal execution module, which then rounds up the offering to what we call end-to-end digital investment banking workflow.
So, Erin, so you're sitting between two FinTech startups. Are you feeling threatened or disrupted? And how is it? I mean, you've been working with, CIBC has been working with a number of them. Can you describe how those partnerships start and how the relationships develop?
And I think since, if you look back, since with this all kind of started around 2010, and where we saw a lot of capital going into these new startups and fintechs, maybe $1 billion globally, with some estimates of research I saw somewhere. But now in 2015, we're looking at far greater, to the tune of probably 20 billion across a number of major economies. And that's nothing to sneeze about. So I think financial institutions initially were extremely concerned. They thought potentially their lunch was going to get eaten by nimbler, faster, smarter new entrants into the market. And for a number of years, we were really concerned about being disrupted. And I think from my perspective, and I'm late in the game here, I've had a long history in banking through a number of different roles in commercial banking, in retail banking operations. I joined CIBC about 3 years ago as head of their product and digital channels for business banking in their transaction banking group. So yes, I have a lot of affiliation with your experience, Kevin. But I was with HSBC for about 8 years prior to that, and certainly got a big exposure into the various things that were happening in other markets. And coming back to a Canadian bank was very interesting to kind of gauge where we are compared to our competitors in different regions. And I've been very, very fortunate to come into CIBC in the last 3 years when we've really been focusing on our clients, on innovation, on simplicity. These are big common themes that are running through our shops, as I'm sure they are with all of my counterparts on the street. But what's really interesting is that we're looking for ways to find partners that can offer more choice to our clients. And whether or not they're offering it through a new type of product or more efficient solution, customers and consumers are demanding choice. And if we're not giving it to them, they're going to find someone who will. And that's why, Kevin, I think when you're saying, we're looking at how we can potentially cooperate and offer an extension of our financial services to clients in a really smart and elegant way. And that's where we can find, I think, a lot of great synergies and opportunities together.
How many fintechs have been pitching you, and how did you decide to partner with them?
I think, there's lots of ways that fintechs come to us. Certainly through our own networks, our contacts. We're continually looking for ideas. We look internationally, and we continuously try and partner. Like this Scotiabank's done a great thing with the digital lab here. CIBC's partnered with Mars District. I think in 2015, we've created a corporate kind of fintech hub, and it's not really like bankers disguised in hoodies and jeans, right? It's actually what we're trying to do is learn from people who have a different way of approaching problems, trying to figure out how we can align with some of the key technology talent that's really attracted in a new way of looking at things. So we're trying to breed that innovation through our institution, at the same time looking for opportunities along the way to partner and find these gems.
So other countries are much farther ahead than we are in terms of defining a fintech strategy. Most people would say that the UK is the first to regulate from top to bottom. It came from the Prime Minister Cameron, Chancellor of the Exchequer Osborne. They basically decided, working with the private sector, with venture capitalists, that they would make London the center for fintech globally. Okay. After they put out a strategy, they actually got Ernst & Young to do a report on them as a fintech center. Australia defined a strategy, then Hong Kong, and then Singapore. And we don't have a strategy in Canada yet. Okay, we've been pushing that through the Scotiabank Digital Banking Lab. We've been meeting with government officials, both the federal and the provincial level. The Department of Trade and Industry in the UK, which is similar to like Industry Canada, now known as Innovation, Science and Economic Development in Canada, they flew 10 Canadian companies and startups to the UK for a week and wined and dined them and tried to convince them to move to London. Can you tell us a little bit about how that happened?
London strives to be the center of fintech globally. And so they connected with the Department of Trade and Commerce, and in fact connected with British Airways, and put out a program to try to bring people and companies from around the world into London. They'd done the same with Australia and so forth, and the Canadians had an opportunity. And as Erin mentioned, David Williamson was there from the CIBC, along with 10 or 11 others, and I was one of them. And my biggest takeaway was how impressed I was with, frankly, how open the banks are to financial technology in the UK. I mean, clearly, I think there's some history to this. I think the fact that they had huge challenges through the crisis, which put the major banks into government hands. It gave the government a chance to really define policy and have some determination on the access of financial services to the public space in the UK. And
now, Vuk, your business obviously will take you into contact with a lot of the big banks and the incumbents in the debt capital market space. What's been your experience in terms of sort of building partnerships with them, or in terms of working with them as well as with institutional investors?
So bank-owned dealers, obviously, market is functioning in a way. All the benchmark deals are syndicated, led by a community of 5 large dealers. So I think we met with most of the dealers, actually all of the dealers, and the conversation is ongoing. I think it's a very friendly conversation. What we're doing is new. It's changing kind of the manual process that existed for a long time. All we're doing is really increasing the information flow, strengthening the confidence and relationships with data and access with all of the participants in the mix, that it's conducive for more deals to happen. There's this activity that has been performed in a manual way, but can be enhanced or replaced with technology, which doesn't mean that the core role of the dealer or the banker will cease to exist. It means that it's just elevated a little bit, right? It's kind of, you got the cell phone, then you got the smartphone. So partnerships are hard to structure. I think they take a long time. So we've taken a route through conversations of working with issuers and working with institutional investors to really focus on the value proposition of the core offering for them.
Great question. Scalability is key to survival. And every day when we think about manual process, we think about where's the scalability. So it is integrated into the DNA of everybody in the shop. We are constantly trying to build for scale. And so the challenge with being in the small business lending space is that it's complicated. It's a very complicated space. It's much more complicated than consumer lending and so forth, and therefore that's why there's fewer of us in the marketplace. So scalability is difficult, but absolutely necessary. And so what we do, basically the code writing team together with the data science team together with the underwriters are constantly interchanging activity around process. Every process that goes on in the business has to be figured out how it can be coded into technology. So
we're trying to use technology to enable that ability to have that more of a personal relationship with our clients. So robo advisory or chatbots or machine learning that are across our data sets, so that we can get very specific about who we're talking to and why. In terms of where we look for partners in fintechs, this is something that we're going to have to get really good at. We're going to have to learn how to fail fast.
How come Australia is able to come up with a national fintech strategy? They've got a federal system with delegation to the states. They have a smaller population than we do. But what they've recognized is that this is a winner for their country in terms of GDP growth. Okay, financial services in Canada represents 7% of our GDP, represents 4.4% of our employment. And if we don't start to pull together and have a national champion, which should be the federal government, that's my view, then we're at risk of losing jobs that'll be moving down to the United States or to across to the UK. And I think it's a question of having a leadership at the top, which is why I'm pushing this at both the Ministry of Finance as well as ICID. And I've made several trips back and forth to Ottawa, and I've told them squarely, the case studies show that other countries, it's the federal government that shows leadership, and we're not seeing the leadership in Canada.
Space. You have to really decide what's more important to you. Big bank comp in my case, but there's other people and other long careers things. You have to just decide, what do you want to try to do in life? I mean, I don't want to make this thing melodramatic, but fintech doesn't pay. FinTech pays, on success coming out, not going in, and so you put your capital into the company and you hope you get it back.
As a company wants to grow, you have to invest everything you got in growth. So if you were to pay large salaries to every employee and then stifle the growth, well, we're going to all go to zero. So that's obviously not going to work. So we kind of pitch it that way as well. Look, I mean, we can't pay what you kind of can get maybe somewhere else, but there is equity, and we are all going to grow this equity together.
The number of startups working in fintech in the United States is tracked at around 1,000 plus, attracting $117 billion in capital. The revenues from those businesses is 1/10 of that or less, which suggests that most of them are going to go bankrupt. Okay, and that's the process of creative destruction. Most of those 1,000 startups will not be successful, and that's what your theory of creative destruction would predict.
Well, yeah, I mean, this stat that Michael quoted, it's actually truth. It's really, you need to do a lot to succeed, and it needs to be more than anybody else is willing even, let alone has achieved. So you need to kind of demand that, and there's a lot of urgency. So all really means, pushing the boundary. If it's a product feature, it needs to be, delivered faster than expected, with a spec that it's higher than we can do. So constantly pushing, and that's an evolving target.
There's technology going on all the time, and this is something that Erin has to live through every day, because her organization, just by virtue of what it is, can't move as fast. And we wonder whether we can. Troy and I can look across each other and say, "Do you want to do this? Yeah, let's do it." And in the bank, it would have taken us 6 months to put a business case together. It's crazy. But that doesn't mean we do it right or we do it well, and there's risk everywhere. And so it's fascinating. And I think if we can do it, I think that Canada has a chance to be really, really impressive in FinTech. But we've got a neighbor to the south that's just so far ahead of us, with a brain drain that goes on, and everybody going to California to learn and then come back. The capital that's available there versus the conservative nature of Canadian investors, it's just tough. And then you've got the UK that has all this opportunity, that's totally opened up the banking system. All their data is going to come on stream in another year. We are years away. If Lendify had access to a marketplace like the UK equivalent to us has there, we'd be even further ahead. It's not going to happen without a lot of people really taking a strong interest in supporting the business platform.
My final comment would be, we can't be complacent. Certainly, financial institutions, as big and as long, they've got longevity and deep pockets, they can't be complacent. The Canadian economy cannot be complacent. We have to find a way to support, like you said, the startups, the FinTechs, the ones who can have a real focus on where do we add value for our shareholders and for our clients. We have to make our regulators need to understand what it takes to open up our marketplace and allow for more entrants and more competitors in our market. Makes us better. We've got a long way to go, but I think we need the regulators, the financial institutions, and also our bright FinTechs who are out there really making sure that Canada remains competitive on a global stage. All of this has to work together within the ecosystem to be successful.
So my view is that Canada has got an aging population. We're going to be deaccumulating assets. We're going to be facing growing competition, which is going to be enabled by FinTech for other banks, non-bank institutions to come into this space. And that Canadians' households are at very high levels of debt to disposable income. We can't grow our financial services by lending anymore. The only solution for Canadian banks and financial services to remain profitable is to export. We have to grow and grow internationally, and FinTech enables that. Or we have to develop new products for existing customers. So this is not just FinTechs against incumbents. It's Canada against other countries in terms of the battle to be first in financial services. That's the way I view it. So let's put our hands together for our three speakers. Fantastic.